Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
This is just one of those days, right, Amy? It's just hard to keep up. It's just fast and furious. You're doing great. All right, Amy Morris there. Hey, listen, folks, we did want to get to a Bloomberg exclusive. SpaceX is in talks to sell insider shares in a transaction valuing the rocket and satellite maker at about $350 billion. That's according to those familiar with the matter. It's a massive jump, highlighting the post-election gains across Elon Musk's business empire. It turns out it's good to be acquainted with the president-elect.
Just look at Tesla since, November, up 40% in the month of November alone. Back to SpaceX, though, would be a significant premium to a previously mulled valuation of $255 billion, as reported by Bloomberg News and other media outlets just last month. SpaceX was last valued at about $210 billion. That was a tender offer earlier this year. For more on all of this in the Elon universe, back with us is Max Chafkin, Bloomberg Businessweek columnist. He's also the co-host of Elon Inc., the podcast. He's also the author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. Max joins us here in the studio. So SpaceX operates in a space where they're pretty much the only player in certain elements of it. I mean, look at what Boeing had to call. The U.S. government had to call on SpaceX to rescue those astronauts because Boeing couldn't do it.
They are the only player in the United States for launching astronauts, and they are the major player for all rocket launches of all kinds.
Okay, so
they have a huge
that
share
said,
of the market overall.
Why is the world so much better for SpaceX under Trump?
Because SpaceX is a government contractor, and most of its money comes from the U.S. government.
But that would have happened had Harris won.
It's true,
There's
but there
nowhere else to spend that money.
It's easy to get. You don't want to overstate their dominance. So they dominate, but there are a bunch of other players, including a bunch of large defense contractors that also have programs, both for launches and also for astronauts. And if you look at the plans for the moon mission, right, SpaceX is only one of a handful of companies that have contracts for this mission. Now, Trump could very easily change that mix, and there's already talk. Musk has suggested that it would be better to skip the moon and go straight to Mars or something like that. So there are lots of ways that Trump or a Trump administration could help Elon Musk. And the most basic one has to do with Starlink. So Starlink was in the running for subsidies for rural internet. It lost out on some of those subsidies. Musk has been very angry about that. And the Trump's nominee to run the FCC was one of the voices saying, hey, this is a great injustice. He's a huge fan of SpaceX and of Elon Musk. So even if you don't see some kind of dramatic shift in space policy, this is very likely to lead to more revenue for SpaceX than it was already going to get. And, that's why the valuation's gone up. It's actually much more straightforward than the case for, why Tesla should be worth 40 or 50% more than it was worth before November.
Wow.
So in other words, their businesses make sense, and it's likely to just keep growing.
Exactly. Yeah. There are a bunch of clear ways, and you see analysts, both telecom analysts and space analysts, talking about this. This is not some kind of hypothetical. You have to squint and imagine some weird, huge regulatory changes to how the government regulates Elon Musk's empire. This is just the government taking out its very large paycheck and giving Elon Musk a little bit more money.
It's interesting because we're seeing it play out. So this is playing out in the private markets right now. We've seen it play out in the public markets over the last month with Tesla up 40%, basically in the month of November. Yeah. Why is SpaceX more of a beneficiary than Tesla? Because certainly public market investors are saying, hey, Tesla's a huge winner here too.
Yeah, I mean, it's essentially the same argument, and I would be surprised. This is what makes it surprising is the size of the figure and the fact that they just wrote up the valuation very recently, as you said. But I would not be shocked if everywhere in Elon Musk's empire, so XAI, that's his AI thing, the Boring Company, if they are also quietly doing this kind of thing, looking at higher valuations, looking at what they can do to take advantage of this moment, because investors are very excited about this. And one thing I should note about SpaceX that also makes it different from Tesla, And one of the reasons why this is more likely, like it's more likely that they will benefit, is that they have a good argument for this. Their product, as you said, is good. They are doing a good job. So you don't have to squint and see some kind of backroom political thing. You could just move the needle a little bit, and it might lead to a lot.
Max mentioned X.
Yeah.
Axios reported earlier this week that Fidelity actually wrote up the value of X, which is, in the last few months, they've written down the value of their investment in X, but a lot of that might have to do with XAI.
I mean, I think it makes sense that they wrote the value up, and we've been saying that on the Elon podcast that this was going to happen. I mean, X, if the election of Donald Trump a few weeks back showed us anything, it is that Elon Musk's media company is influential. And yes, the advertising business isn't looking great, but they have other ways to make money. AI and making their data available to AI companies, including X, is one way. Subscriptions could be another way. This is a company that has gotten more important than it was before, and I think there's a case for raising the valuation.
We were just showing some footage of, was it last month, where President-elect Donald Trump was there with Elon Musk at another launch by SpaceX. Having said that, so great for Elon to be able to say, hey, Trump, he's there, right? Very accessible in terms of talking to him. If they have a falling out, does everybody kind of rethink some stuff? And especially when it comes to valuations?
Look, anytime a business politicizes itself, it creates risk. And one of the reasons that business leaders try not to do this, try not to show up on stage with Donald Trump, is because if there is a break or if the political winds shift, then all of a sudden you're in a box. Now, I would say that I think Elon Musk has a lot to work with, even if the relationship, this probably stressful and inevitably, there may be a fracture, interpersonal relationship. Even if it falls apart, Musk is going to have power both in terms of at the negotiating table with the U.S. government as SpaceX tries to sell it more launches or tries to sell it satellite internet services, because the competition is not that well established, because no one is shuttling astronauts back and forth, and also because Elon Musk will be important within the conservative movement whether or not Donald Trump likes him.
So are all the other billionaires who are doing space, Jeff Bezos and Richard Branson, it's not happening anymore?
No, they are all trying to do this, and we saw Bezos, offer his congratulations to the president-elect on X, on Twitter, where he hadn't posted for a long time. You also saw, the Washington Post decline to make an endorsement, which at least some critics were seeing as a, politically motivated thing designed to help Bezos' rocket company. Now, he denied that. No, he very much wants to sell launches to the U.S. government, and you're going to see other defense contractors, traditional defense contractors, push back. And it's not like they have nothing to work with. These companies provide jobs in states. They operate factories. They have constituencies as well. So it's not like Elon Musk can overnight take over the entire aerospace industry. He's just in a much better position than he was a month ago.
Okay, so Max talking about how powerful Elon is.
Or T-Live, excuse me. Yeah.
Max talking about how powerful Elon is. Certainly when it comes to Tesla, when it comes to having the ear of the president-elect.
He doesn't win all the time, does he?
I was going to say, there's a Delaware judge that seems to sort of have an edge right now.
Yeah.
What's going on with this pay package?
So for a second time, Elon Musk's very, very large, historically large pay package, which, as of now is worth more than $100 million, according to the Bloomberg story that we published, although has been worth, $50 billion. The last time it was rejected. Now, if you remember, a judge had rejected this. There was a shareholder vote. Shareholders approved the pay package. And the thought, at least from Elon Musk and Tesla's point of view, was that this would essentially invalidate the Delaware ruling. The judge said, no, you can't undo a court ruling by having a vote of shareholders. That's a novel application of law that's invalid. And so we're sort of back where we started. Tesla's shareholders would very much like to keep Elon Musk happy, which as far as many of them see it, and he sees it, means paying him a huge amount of money. And Delaware is not amenable yet, although we'll see. Musk and his lawyers have said they're going to appeal to the Supreme Court of Delaware, so it's possible they could overturn it. And then it's also possible he could just take his business to Texas, as he's threatened to do.
What?
Does this change when, I know this is a state issue right now, but does this change when Donald Trump becomes president again?
No, I mean, it's a state issue, and it's also, again, Musk has already moved the company to Texas. You could imagine trying to do this again and then fighting it out in a Texas court, which in theory would probably be more amenable to the pay package than Delaware was. I just look at this as Musk doesn't need the money right now. He's very wealthy.
Wait, we don't need to start a GoFundMe page for him?
He'll be fine.
We do the CEO of GoFundMe on.
Sure.
We do the CEO of GoFundMe on later.
Yeah,
we'll talk
it's
to
a
him
little
about
deep tease for him.
I'm sure he'll take any checks we send him, but he doesn't need the money now. I do think this is a reminder that Elon Musk cannot change the laws of gravity, and he cannot change the laws. There are a lot of people making huge investments in his companies right now, including in Tesla, and even with this SpaceX deal, based on some kind of vague sense that politics will sort of shift the laws of business in his favor. But there are laws of business that are not in his favor, and this is one of them. He's repeatedly gone up against this Delaware judge. Remember, this is the same judge that forced him to buy Twitter/X. So he can't do everything, and again, there are going to be battles ahead, legal battles, political battles, and he's vulnerable to the whims of law and democracy and all that, just like everyone else.
I mean, he can't get everything he wants, but almost. What?
Well, why is the money so important to him?
I don't know, honestly.
Like, if you're worth, let's see,
Here,
Rich Go.
It's in there. It's $353 billion. He's
so
the
the
top
same
of the
as
list.
basically SpaceX, right?
I mean, he's
what's an extra $50 billion?
number one.
What can you buy with $400 billion that you can't buy with $350 billion?
I mean, he has said that he intends to, play a big role in the midterm elections. There's chatter about potential huge donations to British politicians. So maybe he wants to just a little extra cash for his political stuff. But really, I think this is more for him and the people who back him about the principle. And Elon Musk is somebody who has put now a principle. I think there are people who would snicker at that, but Elon Musk has put his own role in Tesla, and its growth central to its brand, and he sees this as an attack. Rightfully or wrongly.
Max Chafkin, always appreciate it. Co-host of the Elon Inc. podcast, a new episode downloading.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, I got to say, geopolitics, yes, there is so much going on. Russia, Ukraine, Middle East, U.S.-China relations. And then it feels like out of nowhere, what has become one of our most read stories on the Bloomberg, it's been atop the list for most of the day, about a declaration of martial law in South Korea by the South Korean President Yoon, only to be followed hours later by the country's parliament voting to lift the declaration. I got to say, Tim, it's a bit of a whipsaw. Yeah,
it is. We got a great live log on it from our team over at Bloomberg News. If you're on the terminal, do check that out by going to TLIV. Here with what is going on, Sydney Seiler, Senior Advisor, Non-Resident Korea Chair Center for Strategic and International Studies. Sydney was the National Intelligence Officer for North Korea at the National Intelligence Council from 2020 to 2023, one of the nation's top experts when it comes to North Korea. And Carol, before that, he was the U.S. Forces Korea Senior Analyst and Senior Defense Intelligence Expert for North Korea, serving as the Principal Advisor and Senior Expert on Korean Peninsula security issues to the USFK commander and the U.S. Defense Intelligence Enterprise.
All right, we had to lay it out, and this is why we wanted to talk to Sydney. Hey, Sydney, great to have you here back on Bloomberg. Tell us about martial law. Came as a shock, I think, to many domestically and abroad when they declared martial law, but the country has a history of martial law and military rule. So give us the history. What's important for the Bloomberg audience to know at this hour?
Oh, thank you, first of all, for the invitation to speak on this. The history is relevant and important only because it's so from a different era. It's worth a warning not to actually view these recent developments in that context. North Korea, as you recall, the Korean Peninsula divided right after World War II, underwent a war trying to unify from 1950 to 53. And South Korea's history has been moving from a very right-wing, pro-U.S. Authoritarian dictatorship to the democracy we have today. Along the lines, there's been a couple of military coups, again, ensuring conservative, hardline towards North Korea, authoritarian in terms of its domestic system, but a gradual growth today to the economic miracle that has begun. And the last coup was 1980, so many years ago, such a different context today. That said, it is one of the few tools at the disposal of the president. It's one you don't want to, break the glass on too early. When you have the type of political deadlock that President Yoon has faced with the opposition, which is all focused on trying to regain power. South Korea has a 5-year presidential system, one term. You become a lame duck real quickly, and the opposition has been tasting blood with President Yoon having 20% and below approval ratings. It was a surprise that he chose this tool at this time. At the same time, there are elements of it that warrant us not taking it too alarmedly and reacting with caution as the U.S. government has so far.
Why is that? The U.S. government was certainly caught off guard. The White House was not notified ahead of time about this, but it sounds pretty alarmist. I mean, the idea of martial rule in a democracy, that is certainly one of those things that I think people would say, it'd be fair to respond with alarm there. Why should we be cautious about doing that?
Well, yeah, I hate to draw parallels, but I mean, if you just look at the dynamics of U.S. political system, back around the first Trump administration, or even today, worries about mobilizing National Guards and using military capabilities. I mean, it unfortunately is something that we've seen in other democracies throughout the world. I think the quickness, first of all, President Yoon is a career prosecutor. He was very heavily involved in the impeachment that removed Park Geun-hye from office. And so, when he embarked on this, he does so from a position of understanding of the Constitution and probably understanding that, as happened, it would be overturned or rejected within hours. And so the fact that the system worked so quickly to have the National Assembly come together and reject the declaration, and that it looks like, the initial steps involved with martial law are being backed off, it is a time to now kind of focus on the morning after, as it were.
Hey, I want to also bring into the conversation Rosalind Mathieson, Bloomberg News news director of EMEA. Of course, we're talking about Europe, the Middle East, and Africa. She's typically based in our London bureau, but lucky for us, and we have been tapping into her big time because she is here in New York, and with all the news, she's here in our New York studio. Roz, we're listening to Sydney, his view, and giving us some context. How are you seeing about what's going on in South Korea? Because I have to say, when we all walked in, we're like, wait, what is going on? And how do we make sense of it?
Everybody was shaking their heads. We were quite stunned to see this news, and particularly, coming in that late night televised address just announcing, emergency martial law, and the words martial law, of course, resonating, in a very tricky environment historically in South Korea. And it's interesting to see how quickly, again, they managed to get into Parliament and they voted to overturn it. So the question is, what was he trying to achieve with this, and what does he do next? I mean, does he remain defiant in the face of Parliament and try and marshal military support or does he accept, what people are saying here about his actions, and does he resign? Or is he impeached at some point? I mean, it can't be necessarily a good outcome for him here. So does that plunge South Korea into a further period of political turmoil where you've got to maybe have elections, you've got to have a new administration? And what does that mean for stability in South Korea?
Which we think that's North Korea, like we expect stuff to happen, not South Korea.
Well, we'll talk about the North Korean angle in a second, but Sydney, I want to get your thoughts on, this idea of an unpopular leader declaring martial law. Does that make him less popular? I mean, this doesn't necessarily, as an outsider, seem like something that would, engender him with a larger group of folks.
Good point. Well, he did open his, his announcement by stating that, kind of using deep state-like language, that there was North Korean agents throughout the U.S. government, anti-state agents, that were out to undermine the very, foundations of the state of the Republic of Korea. So it seems like he was hoping to try to galvanize support from the right, his conservative base, and maybe even some in the middle who would be more concerned about what the opposition was successfully doing in building support to challenge the ruling party in the next presidential election, or even potentially to impeach Yoon. The talk about impeaching Yoon was already in play. And Yoon may have just concluded that, again, he had nothing to lose. Most likely, when you look at the number of ruling party members who would now join with opposition forces, there's probably enough votes to challenge whether Yoon will stay in power. But Yoon is a guy who does what he believes is right. Agree or disagree with his worldview that he was doing something for to protect the Republic of Korea, and he was probably willing to accept whatever consequences would come out of there.
I wondered, Roz, if you had a question, because here he is, like someone who's had some history, understands and has followed, and you look at the world more broadly.
Yeah, I'm very interested, Sydney. You were talking about how Yoon perhaps felt he had nothing to lose, and could he try and galvanise people with this manoeuvre? But again, in a country that's had a really difficult history when it comes to martial law and military rule, and a real strong sense of wanting democracy amongst ordinary South Koreans. I mean, where do you see this going for Yoon? Do you feel he's going to have to step down, or he will be impeached?
My sense is he'll stay the course. He will say he acted in accordance with the Constitution, definitions with some subjectivity as to whether the emergency justified or warranted the action. And again, when you look at the history of martial law in Korea, it's not 40 years passed since the last coup d'etat that kind of facilitated martial law in that 1980 time period. And again, having been my first tour in Korea in 1982, it was a markedly different environment, a markedly different world today. Other elements of the government system are functioning. They're not being rejected. During the martial laws, or when the military seized power from civilians back in 1961, 1979, 80, they were overturning the system. So far, all Yoon seems to be doing is addressing the people in that system. And so I think, again, this is not too apocalyptic in terms of domestic South Korean politics. It's survived challenges like this in the past. Yoon will not, though, I think.
Cindy, what does this mean for the relationship between the North and the South? Is it an opportunity for North Korea to maybe potentially go on the offensive?
So, what's interesting when you think about it, that would be the natural thought, right? That Kim Jong-un may see a weakness in South Korea that he could exploit. At the same time, Kim Jong-un's got his own challenges and issues at home.
Yeah.
Heavily involved in supporting the war in Russia. And perhaps more importantly, with many people expecting Kim to do something, he is likely not to play into their hand and only provide further evidence that what Yoon was saying about the North Korea threat was right. There's a lot of value for North Korea to stand down right now.
Sydney, thank you so much. So appreciate you finding some time for us. Sydney Seiler, Senior Advisor at the Korea Chair, Center for Strategic and International Studies, joining us from the nation's capital. Roz Mathieson staying with us, because I got to say, Roz, geopolitics, it's all we've talked about, I feel like, for the last couple of years, and I'm not even quite sure where to go next.
Geographically, where to go.
Yeah, where would you go next? Like when you think about France, the Republic of Georgia, the Middle East ongoing, Syria, Iran, where would you go next?
Well, there's a lot going on, isn't there?
Yeah.
But France is particularly interesting at the moment because we are careering towards the collapse of the government there as soon as tomorrow. And interestingly, because the right and the left are joining together to do that. And that's going to be a really tricky moment for a very big economy in Europe and a lot of political instability ahead. I mean, if Barnier goes, then you've got a period where Emmanuel Macron has to try and find another prime minister who'd be able to navigate a very tricky fiscal environment. I mean, if Barnier failed, and this is a very experienced, politician with many years in Brussels, if he couldn't manage it, then who can?
I think a lot of Americans, with the system of government that we have here in the U.S. and the dominance of the Democrats and Republicans, might have trouble comprehending the idea of the right and left coming together to topple a government. Explain this to the American mind.
Yeah, it's not because they're supporters of each other, put it that way. In fact, they really don't like each other at all, but they have a common enemy, which is the French budget. And they all have problems with the French budget, and they want changes to it. And the kind of changes that they're asking for are very populist, and they're what the markets don't want, because you've got a very big fiscal deficit.
I feel like I've seen this movie before.
Yeah, so it's not as though they're comfortable bedfellows, but they've got a united enemy. And of course, the backdrop is this is coming at a time when we have Donald Trump coming to power in the US. You've got elections coming in Germany next door. So you've got a period potentially of political uncertainty in Germany. I mean, often after a German election, you don't have a functioning government for sometimes 6 months or more. You got a lot of coalition wrangling that goes on. So you're not going to, if you're talking about European unity right now and a unified European view on everything from Ukraine to the Middle East to trade to tariffs with the US to how to handle Donald Trump in a second administration, you got a lot of fragmentation occurring, particularly, again, the two biggest economies, in Europe, France and Germany. And so what does that do in terms of a cohesive European approach to a second Trump administration?
I'm not quite sure where to go next. Georgia, what is going on there? We know there's pro-European protests. We're watching that. We've been watching some of the footage throughout the day. What do we need to know about that?
There's a lot of talk about whether that's a Maidan revolution, similar to what happened in Ukraine, that pro-European push protests and how successful they can be. But in Georgia, the protests are big, but they're very fragmented. There's not a strong sense of who's driving.
Is Russia
those
driving
protests.
it?
Well, that's always a question.
Yeah.
That was a question in Ukraine as well, obviously, during the protests that we saw there. Russia does not want these countries going into Europe's orbit. We saw that recently, again, questions over the elections in Moldova. For example, the referendum in Moldova about joining the EU wants to pull these countries away and make them argue with each other and make that kind of weaker.
We could talk to you more about Russia, Ukraine, the Middle East. We could talk about Syria and Iran. We don't have time to do any of those things. What I want to do is just in our last 45 seconds, talk about the significance of all of this happening against a backdrop of a changing administration here in the United States, one that was caught off guard by South Korea today.
Well, that is the question, but also it just reflects a changing world. I mean, beyond the US, we're in a world where the US is no longer the singular dominant power. So you're seeing a lot of change erupting from that. Countries deciding to work out, can they have that power block? Are they in that group instead? Where do they belong? The rise of the global South in that. So a lot of fragmentation into different power groups. And that's just natural when you see, arguably a declining singular global power and more of a multipolar world.
20 seconds. Is there a common thread? Is it the rise of populism? Is it just another cycle in the world's history? How do you see that?
It's a bit of everything, but it is that question again of populist movements in several countries. It's not just on the right, I would add as well. It's parties on the left, and the idea of public saying, I want a party, a leadership who's going to talk with me, not at me. And so politicians who are astute, who pick up on that, are the ones who are being successful.
Don't go home.
I was just going to say, make sure you stay until tomorrow, at least.
This is why we love Bloomberg, because of people like you. Thank you so much. Ros Mathieson, Bloomberg's news director, I should say, overseeing EMEA.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, just about 1 year ago, our Bloomberg News team put together a great story highlighting the stock optimists who nailed 2023 and saw more gains ahead. One of those stock optimists who made the right call last year is Ryan Detrick. Detrick expected the U.S. economy to avoid a recession in 2023.
Check.
It did, right? Some say a little bit of a rolling recession, but really we kind of missed it in a big way. He also bet inflation would cool sooner than the market was expecting.
Check. It's still getting there. It's still getting there. It's still getting there.
It's a little sticky.
Yeah.
He added exposure to stocks during the banking turmoil in March 2023 and as the S&P 500 sank in October of 2023. Got to say, Tim, check. Good calls.
Yeah, Ryan Detrick, he's Chief Market Strategist at the RIA and Platform for Advisors of the Carson Group. He joins us here in the Bloomberg Businessweek studio.
Well done.
Well, Carol, can I
hold on. The year's not over, Carol.
No.
Okay?
Every time I present or something, can I have you come and give that little intro? That was very nice. Thank you.
Listen, when people make bad calls, we kind of point it out.
Oh, yeah.
And the same goes for when you make a really good call.
Well, thank you.
So
yeah, it was 2 years ago this month, December of 22. Carson Group went on record. We went overweight stocks. We managed real money for our advisors, and we said no recession. It wasn't very popular, but as we know now, we're looking at 54 new all-time highs, the back-to-back 20% gains. We can get into all of it, but yeah, it's been a great run. Clearly.
So some people might say the U.S. stocks are expensive right now by certain measures, but you argue that there's still room. You argue the bull market is still young.
That's correct. There's a couple ways to answer this one. stocks are a little pricey. I mean, you look at the forward S&P 500 earnings, they are a little bit pricey. But then you look at other parts of the market. I've come on with you guys for 2 years talking about some of these things. Small caps still are cheap. Mid caps still are cheap. Industrials, financials, there are parts that are cheap. Yes, large caps are expensive. But when you talk about bull markets, though, it's so fascinating. This one's about 2 years old, right? October 22, so I had 2 years. So we'll call it 25, 26 months right now. Once a bull market gets into its third year, like this one is right now, into the third year.
Get a little tired?
Yeah, not really, because it looks like a cruise ship. Once they get moving, they keep moving. I went back 40 years, the last 5 bull markets that got into the third year, every one of them made it to at least their 5th year, and actually it was an average of 8 years. I'm not saying this one's going to go 8 years. We're just saying these cycles can last a lot longer than you think.
But were stocks as expensive in their second year as they are now in other bull markets?
I guess the short answer is no. That's a great point. They're not. And one other concern, if you want to use that, is if you look at, like, we gained over 60%, okay, the first 2 years of this bull market. Looking at, like, the last 9 bull markets that made it into the third year, that third year is up only like 2 or 3%. So some consolidation. We think we're going to gain more than that the next 12 months, to be clear. But those are some things to think about. We just had this huge rally. We don't see a recession. Look at the economic data. All-time highs in construction spending just yesterday. All-time highs in earnings estimates we still think are going to be strong. We can get into more of the weeds of that, but there's no recession coming, so we still be overweight equities like we have been for 24 months now.
I'm looking at the equal weighted S&P 500, and it's up about just shy of 18% for the year. S&P 500 is up about 27%. Yeah. If I look at both, equal weighted, just coming off overbought levels, I'm assuming, let me just pull it up on the Bloomberg, the RSI, and if you look at the relative strength on the S&P 500, overbought. Yep. So, I mean, what is it? Just momentum creates momentum, which to me doesn't say that's necessarily a good thing to buy into. It's different if it's fundamentals, it's earnings based, it's those kind of things that I can actually trade on.
Yeah, there's different things you can look at there. When you think about the equal weight, what's that tell us? Well, it tells us a lot of participation, right? We know that. Look at various advanced decline lines on small caps, mid caps. Oh my goodness, yes, absolutely. Just 2 weeks ago, right? There's 11 sectors. 10 of them outperformed the S&P 500. Last week, 8 of them outperformed the S&P 500. What's happened since the election? Small caps, mid caps, a lot of other areas, not just tech, not just communications, have been doing well. So that's that broadening out. But I'm with you 100%. Those are the technicals. Then we look at the fundamentals. I mean, what are the credit spreads doing? You mentioned March of 23 when you had the banking crisis.
Yeah.
We didn't really see much stress in the credit markets. Think about the yen carry trade unwind, those 3 very scary days earlier in August. You know what the U.S. dollar did? U.S. dollar went down then. Historically, when the dollar goes up, that's a worry. Now, I will say right here and now, one of our worry, we're still bullish.
Because it's seen as a safe haven?
Exactly. Seen as a safe haven. But you've got dollar strength. I'm surprised, honestly, the dollar's been as strong as the stock market's been as strong as it has been with the dollar strength we've seen. So into next year, if the dollar continues to strengthen, that is a concern of ours. We don't expect it to, but if it does, that could be a sign that, maybe a little more risk off is in play. But we're not seeing it yet, let's be clear.
What is the difference going into 2025 versus what you saw a year ago sitting here?
Great question.
Yeah, that's good. Well, I guess we're all 1 year older, that's for sure. But I will say one big difference, what we're seeing now, kind of the other answer, we are seeing broadening out. We are seeing a lot of participation. Remember those last 2 months last year, big rally, small caps, Russell 2 by small caps, gained like 21%. Then they were flat the first 6 months of this year. But since the middle of the year, we are seeing more of a broadening out, which is a nice thing. Also, manufacturing has not done very well in our country. We get it. But just look at that data we saw yesterday. Maybe we're starting, maybe, tell me there's a chance here. You're starting to see a bottom, if you will, in some of the manufacturing data, which is a positive. But services have been strong the whole time. Earnings have been pretty strong the whole time. So there are some similarities, but the reality again is one more thing on this. So we're up let's assume we're up 20% this year. I know we're not there yet, but we probably will be. We looked at back-to-back 20% gains since 1950. Found 8 of them. What happened the next year? Market was up 6 times, up 13% on average. So it's not like a huge gain, but just because we're up 20% 2 years in a row, that is not a reason to be bearish. And there's other stuff to look at, I get it, but that's just something to be aware of.
Any of those 8 years have a new president in the White House?
That's a very good question. I'm not sure, but I can dive into that for a second here. When you look at, is a new president, is a re-elected president. I get we can look at that either way, but when you look at re-elected presidents, year 1, stocks do really well. And year 2, they do really well. It's later in a re-elected president's term they don't do as well versus the exact mirror image of that, what we just saw with President Biden. First, second year, not as good, but third and fourth are strong. And again, you can get into the weeds of why this this is, probably because you know what you're going to get. There's less uncertainty with someone who's potentially won a re-election, and I get it, this time is a little bit different. But the reality, again, is, you look at what's happening, and then we can get into the F word, the Fed, if you want. I mean, that's another big driver here.
Well, I wanted to do, before we get to the F word, let's do the T word, tariffs.
What's that? Oh, okay.
Because, and I think Carol was getting at this, but the idea...
I thought it was Thanksgiving. How much turkey we had.
That has come and gone, unfortunately.
In the rear view.
In the rear view. But I'm wondering about what that does to the market. If President-elect ends up going through with the tariffs that he's threatened. We had Henrietta Trey's on last week from Beta, who said, he's going to do it if he says he's going to do it. What does that do? Especially to small caps.
Yeah, well, what do we know? We had a 15-month rally after the election in 2016. February 4th is when we all say slapped on tariffs. And the market didn't have a very good year in 2018. Maybe there are other factors in there, but that's the reality what happened. Now, I will say this. We're all talking about it now, right? Mr. Market's probably priced a lot of this in. The reality is if you do the 25% tariffs on, I guess Canada and Mexico, and 10% tariffs on China, the full thing, that probably will slow down the rally we've seen, maybe potentially cause a little bit more inflation. I will say this, though. You look at inflation, year-over-year CPI in 2018 and 2019 when those tariffs started, it's not like we saw massive inflation. I get it. Parts of the economy saw inflation, but the overall economy, you really didn't see inflation. So that's something important to remember.
Ryan, last question. I get a little hinky when everybody's so enthusiastic. We've done a whole story about the strategists and their targets. And
we should get Warren Buffett on. He's not super enthusiastic.
Not everybody is, and it makes me a little hinky, whether it's still corporate real estate or office properties or whether it's private credit, because we don't have much transparency. What's the one thing that you think, man, keep an eye on, because that could be kind of the canary in the coal mine?
Yeah, I think I answered a little bit ago. The U.S. dollar, right? If the dollar continues to be strong, that's the one thing. And honestly, yields. If yields keep going higher, look at the housing data. Housing's an issue. Small business confidence come back a little bit, but we're not seeing small business investment. That's why we think with the higher productivity that we're seeing in our country, with inflation being last year's problem, the Fed still can cut. One more, I'll leave you on this. When the Fed is cut with the market at all-time highs, we took a look at this using Bloomberg data back to 1980.
Right.
1 year later, S&P's been higher 20 times. It's happened 20 out of 20 times 1 year later. So we just saw a cut at all-time highs. Recently, we might see another one cut near all-time highs here in December. That is a bullish thing. Do not fight the Fed, is what they taught us a long time ago. We'd still side with that.
Yeah, that kind of still holds. It always does. Hey, Ryan, thank you so much. Happy holidays.
Appreciate it and love being in your city. Thank you.
Nice having you in studio. Ryan Detrick, he's Chief Market Strategist at the Carson Group, as we said, joining us here in our Business Week studio.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Carol, many Americans agree there's a housing crisis.
Totally.
Radically different, though, than from the last housing crisis. So instead of the values of homes dropping too fast as they did during the foreclosures debacle starting in 2007, you covered that a lot.
Yeah. Oh my God. I remember going to people in, I think it was Florida. Forgive me. I'm trying to remember. But talking to homeowners who were just, losing their homes, couldn't afford it. It was just a really, really tough situation and just such a low. And we know homes not only important for our people to live in, but it's often their biggest investment.
So fast forward a few years, and instead of home prices dropping too fast as they did during that foreclosure debacle back in 2007, they've stayed stubbornly high, locking many would-be buyers out of the market, raising rents and adding to anxiety about the cost of living. Amy Rubenstein has spent her career in real estate. She's seen the industry through different cycles. She's the CEO of Clear Investment Group. It's a Chicago-based firm, focuses on distressed, mid-size, multifamily assets. Think 300 to 1,200 unit portfolios in secondary and tertiary markets here in the U.S. The company currently has assets in Syracuse, New York, Columbus, Ohio, Shreveport, Louisiana, and in Illinois and DeKalb in Chicago. Amy, welcome.
Thank you. Thanks for having me here.
So let's talk a little bit about the overall market right now and where you're seeing opportunity, because we spend a lot of time talking about high prices.
Yes.
But you're going after a different type of market. Where are you seeing
Correct.
value?
Yeah. We're looking at renters who are renters by necessity and not lifestyle renters, so a little bit different than that housing market. But, we see we particularly love to invest where there's stable markets, not necessarily growth markets, because growth markets have a lot of speculation in them. Mm-hmm. They're really looking towards the future, what's going to happen, and they're usually priced that way. But we like markets that are very, very stable. And of course, we do try to stay away from declining.
So stable,
markets.
you're just saying not a lot of price fluctuation.
Well, I'm not even so much much there, but stable as far as population, as far as rental growth that at least keeps up with inflation, as far as job opportunity and employment stability. So it's that kind of stable that we're looking for. Pricing is going to go up, right? That's as far as like we've been in a period of time where multifamily the real estate market is really segregated as far as different asset classes. Fair. But multifamily itself right now has had a bit of a pause for the last 2 years, right? There haven't been a ton of transactions going. And now I think we're starting to see those transactions pick up. And so pricing will start to rise with it. But we did have quite high pricing in 2020, 2021, and then started to drop down 2022, 2023. Where
exactly do you play in terms of what you do with an asset when you get it?
Yes.
Do you own and operate it? Do you flip it? Yeah. Explain for everyone what you do at Clear.
So what we particularly do is we look for assets that are distressed themselves in communities that are stable. And so we look for things that have severe problems, and then we solve those problems, and then we go ahead and turn around and sell it.
Okay, so what kind of problem, for example, a property in Syracuse or
high vacancies, high delinquencies. Sometimes that comes with some crime. Sometimes that comes with physical distress. Well, it almost always comes with some physical distress. And we're figuring out what are all those problems? Why isn't this particular property performing like the ones that are surrounding it? And then how do we get it to be stable so that we can then go ahead and sell it?
So in other words, when you buy a distressed property, it's not like everything's in distress. You're saying here's one property and there's other properties, multifamily, around them that are actually doing okay. So why is it this particular property?
Exactly. That's what we're looking for, because then we understand the value of our
Because you're not going to necessarily buy into an area where it's all distressed.
No, because that's speculative.
Yeah.
And then you have to guess, how do you get this whole community back up and running? Which is a thing. It's just that's a lot to overcome, right? So we're saying we understand the value of our asset because we know the value of all of our neighbors' assets. Now our asset's not performing, so we have to figure out how to get it to that performance place.
In general, real estate is a pretty efficient market.
Yes.
What are you able to do that other players aren't able to do? Like, why is that thing sitting there distressed until you come along?
I think a lot of buyers look for, what is your incoming cap rate? What are you going to buy it? What's your NOI going to be when you first buy that property? And for us, that's not going to deter us if the property is negative cash flowing. Because what we're really looking for is, where are we going to get this property to? What is the NOI going to be when we complete this property? And what is the cap rate going to be when we sell this property? As opposed to, where is it now? Where is it now is just a variable. It's a place mark, right? So we're saying, all right, now we're negative cash flowing. Here are all the problems on the table. We needed to get it to this point, and we know exactly where that point is, because we're not trying to change our asset class. And how much time and how much money is it going to take us to get from point A to point Z? And that's basically what our company does. And when we raise a fund, we're looking to, our diversification comes from our geographic diversification, but the assets that we're buying all look exactly the same.
You keep saying NOI, net operating income?
Correct.
All right, so basically you're looking at expenses versus the income that you're getting from a property. So it's kind of a basic metric, but tells you a lot. What does your sector that you are involved in tell us more broadly about the real estate market?
Yeah. So we specifically are working with affordable housing, not affordable housing from a technical government standpoint. There's no restrictions on the properties that we buy, but we're servicing a tenant base that's somewhere between $35,000 and $85,000 of annual household income. And what we're really servicing an area of great need, because we are buying assets and even selling our assets far below replacement cost. So when someone's trying to build a new property, they're not going to be able to compete with the pricing that we're going to be able to offer. And that's created a major shortage of affordable housing in the country, because the costs of construction are really high right now. With interest rates high, the cost of construction is high, and therefore new affordable housing is not coming onto the market.
So what are the rents that you typically charge in that kind of affordable housing?
It could be somewhere on average between $700 and $1,200 of rent.
Okay. Yeah.
How long does it typically take you to turn a building around?
We're stabilizing anywhere from 12 to 36 months.
And what's the scale that you're able to bring, given that it's relatively geographically diverse? So you need to have different people in those areas. It's not like you have one local company that you work with that you can scale that goes around and fixes things up. You have to actually find those folks in each of these markets.
We're big on
That's not super
supporting.
efficient.
Well, we want to support the local markets that we're in. Those are
Right.
the people that we're servicing. Those are the people we want to give the jobs to. So when we get to a property, we'll bring our staff out there to get it started and up and running, but we're really trying to help to hire locally so that we can actually help that community that we're in. It's beneficial for everybody that way.
How much is, though, about getting it up and running well so that you can then sell it off? Like, how long do you hold on to a property?
We're somewhere from 2 to 4 years usually.
Okay.
That's
So
typically
this-
what we're doing.
Yeah.
What does turnover look like in terms of tenants during that time?
So our goal is not to displace people. We really want.
But don't you have to
people-
raise rent in order to actually make the changes and
Kind
have
of
the
the
money?
beauty of what we do is we're really trying to go for efficiencies of the particular property itself. So we're really trying to figure out, why aren't people paying their rent today? Why are there so many vacancies today? And how do we solve for that? More so than how do we hike up everybody's rents? Because we're not trying to gentrify our areas. We're really trying to dig into that particular community. We want everyone to stay in their places. We want them to pay rent. We want to be able to offer that affordable housing. We're not trying to price people out of that market. So it's less about raising people's rents and more about getting people to pay rent and to move into our buildings.
But if someone's not paying their rent, then they can't really stay, right?
So if someone is absolutely not paying their rent, usually we find that people aren't paying their rent for various reasons. Maybe they're not getting the services that they need, which is really why we have a massive shortage of affordable housing. I mean, yes, it's also because you can't get new construction, but it's also because you have a lot of owners who've run out of money and they're no longer putting money into their properties. And so someone has to come back and restore that value.
We've only got about 20 seconds left. You've been doing this for over 20 years. You founded your company back in 2003. I am curious, when you find that distressed property among other properties that are doing well, is it typically the reason it's not doing well because owners have run out of money?
Yes, that's what our fund is really based off of, just buying deals where the sellers have been in distress, where there are dollars that have been lost on the table, and we're going to come back and bring back that value. So that is.
Yeah, pretty interesting stuff. Amy, thank you so much.
Thank you.
Thanks for stopping by. Amy Rubenstein, she is Chief Executive Officer of Clear Investment Group, joining us right here in our Bloomberg Interactive Brokers studio.
This is Business Week.
You're listening to the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, "Alexa, play Bloomberg 1130.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. We've got just about 18 minutes left in today's trading session, getting ready to wrap up the Tuesday trade. Just as you heard, Amy Morris, we're kind of rolling over our best levels of the session on both the S&P and the Dow. S&P and the NASDAQ 100. But little change, really flat on the day. And it does feel like we're taking maybe a bit of a breather. We're going to hear from Jay Powell, Fed Chair Jay Powell, tomorrow. We just talked with our Stuart Paul about that. And of course, you got the big jobs report on Friday. So those will be really key in sentiment, economic backdrop, and then what it means, particularly the backdrop that companies are going to be living under for at least the next month or so. All right, let's get to it. Our Drive to the Close guest on this Tuesday is Alexis Browne Roberts. She's COO at Alexis Investment Partners, and she joins us from Houston, Texas. She, the firm, I should say, has about $170 million in assets under management. Alexis, good to have you here with us. Tell us a little bit about the investors that you predominantly deal with, institutional, retail, family offices. Just give us some background.
Well, hi, Carol and Tim. Thanks so much for having me on. It's great to be here and it's great to meet you guys. So what we have is we really work with a variety of people. We do work with high net worth individuals, individual investors in general. We work with small businesses, retirement plans, 401ks. We primarily, though, host run an exchange-traded fund called the Alexis Practical Tactical ETF. And that's really the core of what we do. Since that's where we make most of our tactical trades, it's really a flexible, go-anywhere portfolio. It's 100% of what I'm invested in and what my father's invested in. We're a father-daughter team. It's really just the two of us in the shop.
But you got the name. But you got the name of the fund. It's not called,
Dad.
Yeah.
Okay, to be fair, my dad just really enjoys naming things Alexis.
Before you were born or after?
No. So I'm totally kidding. Really, I was the first Alexis, and obviously I'm his child, and he named the firm Alexis Investment Partners. So prior life, he's been in this for 30 odd years and was chief investment officer, president of a series of funds out of a firm out of San Francisco. And then when I went to college and decided to follow in his footsteps, like I had always dreamed, I'd grown up in the business, idolizing him and getting to do jobs at his prior firm, even when I was in high school researching. And then when I went to college and decided to pursue this, he created Alexis Investment Partners. And from there together, we launched the Alexis Practical Tactical ETF, and the ticker symbol is Lexi there because it is the core of Alexis. It's the core of what we do. We're benchmarked 70-30, but we can go as high as 100% equity, as low as we want. We don't tend to go quite to those extremes, but we're very flexible. And really our goal is to add value through full market cycles by participating more in up moves than we do in the down. And some of the ways we look to achieve that are by incorporating a broader range of asset classes, so not just being stuck in equities and bonds. And that's really been helpful in this environment, and being more model informed instead of just purely model driven.
So it has about $96 million in assets in the Alexis Practical Tactical Fund. Expense ratio of about 1%. Is the money in the fund, how much of the money in the fund is from your clients, like you place them in there, versus people who externally end up buying the fund?
I want to say about 75 million, and maybe closer to 80, is ones that are part of the Alexis Investment Partners bucket. And then the rest is from outside investors. We do have a partnership with a firm out in Florida that has about $1 billion in assets, where we're a model provider for them for their tactical sleeves, also called Practical Tactical. And so a portion of that goes into the fund as well.
So it's interesting. Let's see, the holdings. Am I looking at the right page, Carol?
I think so.
Is it gold is the top?
Yeah.
Is the top holding here?
Is that right?
Gold is the top holding. That is correct. So like I said, we incorporate a broader range of asset classes. Obviously, inflation has been a big worry for investors, as well as geopolitical risks and monetary risks. I mean, it's not just the American Fed that's moving things around right now. Federal Reserve banks all over the world are having to deal with very tough monetary conditions. And so gold has a tendency to do very well in environments like that, and it has been. So that is currently our top holding. Now, we're not bears by any means. If you look through, we're actually quite neutrally positioned right now. We're right about that 70% equity exposure as well.
Interesting. Tell us about, and have you upped that recently, or have you reduced that recently?
It's fluctuated. We had upped it and then we reduced it. And right now we're kind of nibbling back into things. We're really looking at it as there's a lot to like in markets at this moment.
Equity markets in general, or markets in total?
That's a really good question. I guess both, because we do have equity exposure. We have bought into a REITs position lately. We do like our golds position. Really, the part that we're not so crazy about is bonds. We'd prefer cash and just other alternatives there. But I think from an equity perspective, things are still looking strong and still looking good there, but it's not the only place we want to be. And we do want to recognize that this has been a great year, despite all of the headwinds and the crazy headlines. It's been a really great year. And so it would be very normal to take a breather here, and we'd want to have some buying power there.
Listen, it's been a great 2 years, certainly for the equity side of things, right? Anybody who's trying to be a bear has had, or short this market, has had maybe some moments of opportunity, but it's been tough. Having said that, post-election, did you guys rethink any allocations?
The election's been a funny one. So about half our clients are super happy and the other half are freaking out and not happy at all.
Kind of like the country, 50-50.
For the world.
That's very true. It's very true.
So I think really no matter where you are politically, though, there's going to be good and bad to this administration, like there is to every administration. I mean, on one hand, you have tariffs and deportation, and those are definitely risks. And then on the other hand, I mean, you do have a much better business environment. You have taxes. And so from a market's perspective, we've really chosen to focus more domestically since then, I would say. There's just not a lot of benefit to being in foreign stocks that we can see given that environment. And we do see a lot of benefit to being domestic. And from a more of a client side, from a financial planning side, we have noticed that tax cuts are probably going to continue. So Roth conversions, we've been pushing those out, whereas we may have had more urgency around those otherwise.
And the QQQ, you like those big cap tech names, right? You're still okay with that? Just quickly, got about 20 seconds.
Yes, no, we still do like tech for sure. I mean, they have come up a long way, but they have great earnings. When you're looking at AI, productivity, that's really where it's going to be. But at the same time, with something as important as AI, similar to we saw with the internet, it's important to recognize that other players are going to be the ultimate beneficiaries of that AI trade. So while we still definitely do love tech, we also are a fan of diversifying outside of there because a lot of those names are really going to benefit as well.
I want an ETF named after me.
You can do it.
Hey,
you can do it.
Fun. I recommend it.
That ETF, by the way, up 19, almost 20% this year. Alexis Browne Roberts, thank you so much. This is Bloomberg.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.